lots of focus on that MPC decision today. Are you in line with consensus? Are you anticipating a 50 basis point hike?
I'm anticipating a 50 basis point hike. I think there's no more room for maneuver. I think the central bank would actually be wise to use some shock therapy and increase by 100 basis points and do a Sanusi on the market. But I think they're very pro-growth. But they are a little bit behind the curve. They need to catch up, and they need to bear their fangs a little bit. And I think this will be their first opportunity to do that.
Of course, this in an attempt to try and tackle surging prices, and while we have the shilling moving on other bigger issues like liquidity, a decision to hold the rate would be detrimental to the shilling as well, right?
Absolutely. It would be a diabolical decision. The shilling has already come under pressure. It was extremely disorderly. We traded an all-time low of 87.15 not so long ago. And also the bond market has come under incredible pressure of late. It's turned very disorderly. We had a huge move in interest rates last week on the 2, 10 and 20-year auction. And I think the central bank need to bring everything under control. And the only way to do that is to take the old Bundesbank line and start to put the market on notice that they're prepared to hike rates aggressively in order to bring this all under control.
Well, we've had this conversation before about the kind of activity we're seeing from the CBK when it comes to intervention in the currency market. Is this still confounding you?
Well, the central bank is saying that they're under an obligation. They've taken a loan out of about $500 million from the World Bank and the IMF, and that they are under that agreement. They have to raise their import cover to 4 months of import cover, and hence that's the reason they're in the market buying euros. But clearly they are the biggest seller of shillings in effect by conducting those operations. I think they should be speaking to the World Bank and IMF. They should be on the sidelines. They should be allowing the shilling to strengthen a little bit. But clearly they've not been able to do that. They have been mopping up excess shillings in the market, but the sterilization has not worked meaningfully. So I think although they've tried to mitigate what they're up to with this euro buy program, it hasn't really worked. I think the shilling remains very fragile, and the central bank needs to take charge. And the only way they can do that is by raising interest rates at least 50 basis points.
Well, moving to a look at the equities picture in the meantime, as I touched on earlier, we saw that slight slip back in the NSE, but many analysts expecting moves higher this week. What's your outlook for the market at the moment? Because we did see the NSE 20 share index touch a 10-week high on Friday above that 4,000 mark.
It's come back gradually. We traded a 52-week closing low at 3,870. We've rallied nearly 6% since then. As you've noted, we're now at a 10-week high. And I think, we've got a number of positive things happening at the bourse. We got Uchumi, which was off the market for nearly 5 years, coming back. That will increase liquidity, and I sense a degree of optimism will come back because a lot of retail investors hold Uchumi paper. And I think that will, the return is a significant milestone for the bourse. Also, we got the KQ results. As you mentioned, KQ's rallied something like 22% off a 52-week low of 31.75 in anticipation of these results. I think a lot is priced in now, especially given the fact that KQ is going to launch a rights issue at some point this year. They need to strengthen the balance sheet. I, for one, think we're on a gradual trend higher. I'm looking for 4,100. But no big fireworks right now.
If we look at those companies individually, and let's start off with Uchumi, I mean, what's your view on the company? Has it cleaned itself up enough for you to be a buyer at this stage?
Yes, I think I think it has. I think the space they're operating in is very exciting. Walmart made its first purchase for 10 years of Massmart. The supermarket assets, the growing consumer spending in Africa is a sexy place for investors to look at. I think the price discovery process might be a little bit tricky. We are, after all, on the very frontier here in Nairobi, and you can have extreme volatility. It's been absent for 5 years. It's going to come back. So I would be looking to buy it on dips. And I think there is a very good future for Uchumi. It's been cleaned up, tidied up, and the next stage is now to take a more offensive position. I would suspect they're going to come back to the market for money, though, at some point reasonably quickly as well.
What's happening regarding a potential listing of Nakumatt? Is that still in the pipeline? Because then you'd have investors faced with a choice when it comes to the retail space.
That's an interesting question. I think Nakumatt's listing is some ways away. I mean, I don't see that happening this side of the election, which is 2012. I think that, you know, they've gone several routes. They were going to get a strategic investor. They didn't. I think there are issues around Nakumatt's listing which will not be resolved in the near term.
Then when it comes to KQ specifically, of course, as you've highlighted, there's lots of optimism when it comes to earnings expectations from here on out. We've had the companies making huge investments in expanding routes, its fleet as well, working on cost efficiencies. Are labor and wage issues completely out of the way here? Because that's a factor that's always seemed to rear its head and bite.
Yes, I mean, I think that's always going to come back and bite at various times. That's an issue because people are comparing themselves to the likes of Qatar Airways and other airlines which are able to pay considerably higher than KQ can pay. So that will always be an issue for Kenya Airways. But for shareholders, it's obviously a compelling story because KQ's labor costs are considerably less than other airlines elsewhere. I think with Kenya Airways, we saw very strong first half results. The profits were up 66% at that point in time. I think the market, the PE is very low. And if he comes in line with the first half, it's going to remain a cheap stock. But overhanging KQ is a massive cash call that is inevitable and will be coming at some point this year. And I think that will stop the share price running away to the upside. But I, for one, am reasonably optimistic. I think, you know, this is a good price, but I don't see a runaway rally post results.
Then we've got a number of companies closing their share register payments for the 2010 dividends in the tourism space as well. TPS Eastern Africa, your view on that company?
I'm confident that TPS is going to continue to expand. It's the only way to play the tourism sector in the East African area because it's the only listed share. And it's very well managed, well organized, and they continue to grow their footprint. They're in Kampala, they're in Rwanda, and I think they're less a Kenya player and more an East African player. And for now, I think it remains good value with plenty of upside, especially because I think they've picked up a lot of bookings from people who've foregone going to North Africa. They've had a temporary bookings build up on that basis.